The mirror of capital, Bitcoin's ascent and the shifting sands of value when Bitcoin ascends. The market's echoes are not merely price movements, but a profound revelation of capital's restless search for truth. We observe how the perceived value of related entities shifts, exposing the fragile architecture built upon a singular, unyielding foundation. We observe the market's breath, a collective inhale after a moment of doubt. You see the numbers climb, the headlines declare a surge. But what if the true story isn't in the ascent itself, but in what the ascent reveals about the ground we stand on? For a moment, the digital realm, often dismissed as ephemeral, commanded attention, drawing capital with a magnetic pull. Bitcoin, the silent architect of this new financial consciousness, pierced through a crucial psychological barrier, surpassing $72,000. This was not merely a price point, it was a threshold, a testament to the collective will, or perhaps the collective anxiety, that drives human action in the face of uncertainty. You might have seen the immediate reflections of this movement in the broader market of crypto-related equities. Coinbase, the digital gateway for many, saw its valuation leap as if the very act of facilitating exchange imbued it with a new, stronger pulse. MicroStrategy, a corporate entity that has chosen to anchor its destiny to Bitcoin's immutable ledger, also experienced a significant uplift. These are not coincidences, they are causal chains, visible manifestations of how capital flows, seeking leverage, seeking exposure, seeking a proxy for the very truth Bitcoin embodies. Well, what does it truly mean when the reflections shine brighter? Does the mirror create the light or merely capture it? Consider the nature of these entities. Coinbase, for instance, thrives on the activity around digital assets. Its value is a function of transaction volume, of the human desire to buy, sell, and speculate. It is a toll booth on a highway, benefiting from the traffic, but not the road itself. Its fortunes are tied to the ebb and flow of market sentiment, a sentiment often ignited by Bitcoin's movements. When Bitcoin rises, the perceived opportunity for profit expands, drawing more participants, more transactions, more fees. This is the market's spontaneous order at play, but it is an order built upon a foundation that is not its own. Then there is MicroStrategy, a fascinating case study in corporate conviction. Its strategy is simple, yet profound. Convert depreciating fiat into appreciating sound money. Its stock, therefore, becomes a derivative of Bitcoin itself, a publicly traded vehicle for Bitcoin exposure. You might see its gains and think of it as a separate entity, but its very existence as a high-performing asset is a direct consequence of its Bitcoin holdings. It is a testament to the power of a clear, long-term time preference, a stark contrast to the short-term quarterly earnings reports that often dictate corporate strategy. Yet, even MicroStrategy, for all its conviction, remains a corporate structure subject to the whims of traditional markets and regulatory frameworks that Bitcoin, in its pure form, transcends. We also observed other entities riding this wave: Galaxy Digital, Robinhood, Bitmine, Circle. Each represents a different facet of the digital financial ecosystem, a different attempt to capture or facilitate value in this nascent space. Robinhood, a platform that democratizes access, sees its fortunes tied to the retail investor's appetite for risk and reward. Galaxy Digital, a financial services firm, benefits from institutional engagement. Bitmine, an Ethereum treasury firm, points to the broader crypto market, a realm where the principles of scarcity and sound money are often diluted or outright abandoned in favor of speculative narratives. And Circle, the issuer of stablecoins, presents a paradox, an attempt to tether the volatility of digital assets to the perceived stability of fiat, creating a bridge that is only as strong as the currency it pegs itself to. You see the intricate web, don't you? Each thread pulling on another, yet all ultimately connected to the central gravity of Bitcoin. The miners, too, saw a rebound. Bitfarms, Hive, Hut 8 Iron, these are the physical manifestation of Bitcoin's security, the energy converted into immutable truth. Their recent gains, following a sell-off, highlight the cyclical nature of their business, often tied to Bitcoin's price and the cost of energy. The article notes their increasing ties to the artificial intelligence data center buildout, a fascinating convergence. It suggests that the infrastructure built to secure sound money might also find utility in the next great technological frontier. This is human ingenuity at its finest, adapting, evolving, finding new avenues for profit and purpose. But it also reminds us that even the most fundamental aspects of the Bitcoin network are subject to the economic realities of energy markets and technological innovation. You might notice the broader U.S. equity market also registered modest gains. The Nasdaq and S&P 500, those behemoths of traditional finance, also edged higher. But do not confuse a shared direction with a shared foundation. The gains in traditional equities are often driven by different narratives: corporate earnings, interest rate expectations, geopolitical stability. Bitcoin's ascent, however, often signals something deeper, a flight from the very uncertainties that plague the traditional system. It is a quiet rebellion, a vote of no confidence in the endless expansion of credit and the erosion of purchasing power. The $70,000, $72,000 range for Bitcoin was more than just a resistance level. It was a psychological battleground. For weeks, it capped previous attempts at upward momentum, a testament to the collective doubt that lingered. To overcome it was to break free from a perceived ceiling to signal a renewed conviction. This is the market speaking, not through words, but through price, revealing the aggregate belief of millions of individual actors. An observer, Jasper DeMare, noted Bitcoin's outperformance after a period of underperformance, suggesting a divert. He posits that crypto assets are not tied to supply chains, energy costs, or other narratives weighing on traditional stock. This is a crucial insight, one that Blocksonic has long articulated. Bitcoin, by its very design, is insulated from the inefficiencies and distortions of the fiat supply chain. It is a digital commodity, a pure form of money, unburdened by the physical constraints and political manipulations that plague traditional assets. Its value is derived from its scarcity, its immutability, and its network effect, not from the fluctuating costs of oil or the disruptions of global logistics. DeMare further suggests that equities in crypto have become substitute risk assets. This is where we must pause and reflect. Is it truly a substitution or a revelation of what was always superior, simply waiting for the veil of illusion to thin? When uncertainty slows inflows into stocks and capital rotates into digital assets, what is truly happening? It is not merely a shift from one risky asset to another. It is a flight from managed uncertainty, the uncertainty inherent in central bank policies, government spending, and inflationary pressures, towards transparent certainty, the certainty of Bitcoin's fixed supply and immutable rules. You see, the opportunity for crypto that DeMare speaks of is not just about speculative gains. It is about the market, in its infinite wisdom, recognizing the fundamental difference between assets that are subject to arbitrary human intervention and an asset that is governed by mathematical truth. The fluid situation and the caution about outperformance not lasting, due to longer tension resulting in higher energy prices, sticky inflation, which could lower the odds of another rate cut, are all symptoms of the fiat system's illness. These are the very forces that drive individuals to seek refuge in sound money. High energy prices, sticky inflation, these are not negative for Bitcoin's fundamental value, but rather underscore its necessity. They are the consequences of credit expansion, of monetary illusion, of the very interventions that Bitcoin seeks to circumvent. Volatility, as DeMare expects, will persist. But volatility is not always danger. Sometimes, volatility is just truth, stripped of permission. It is the market finding its true price, shedding the layers of illusion and miscalculation. It is the necessary process of discovery where human action, driven by purpose and preference, constantly re-evaluates value in the face of ever-changing information. The question then is not merely about where capital flows, But why it flows? What does this movement reveal about our collective understanding of value, of risk, of freedom? When the market embraces Bitcoin, it is not just embracing a technology, it is embracing a philosophy, a return to principles of sound money and individual sovereignty. It is a quiet acknowledgement that the old systems are faltering, and a new, more resilient architecture is being built, block by block. We are Blocksonic. We don't predict the market. We read its memory. Never forget, Bitcoin is only yours in your cold wallet.